Okay, we continue with banking. We're going to take a look at bank accounts. I would like to mention that we are on Pathfinder. This is Zambian app that has different teachers who teach different subjects for different grades. You can also get study materials on Pathfinder. Even our commerce pamphlet that has all past papers from 2020 solved. You can get it there. Let's get started. So far, we've looked at introduction to banking, we've looked at bank services and facilities. So now we look at types of bank accounts. In the next lesson, we'll look at the check system and then the central bank. Okay, we're going to take a look at three types of bank accounts, three main types of bank accounts. We're going to start with deposit account. So this is a type of account which is suitable for keeping money temporarily, okay, which can be liquid capital or just money, which one does not want to use immediately. So if you want somewhere where you can keep money which you don't want to use for a specified period of time, you can open a deposit account, okay, meaning that you cannot withdraw that money before the stipulated amount of time. If, for example, you have stated that you want your money to be in the account for 1 year, you cannot withdraw it before the end of 1 year. If you withdraw it before the end of the 1 year, if you want to withdraw it before the end of 1 year, there will be penalties or repercussions. Because you're going to keep money, it's more like you're lending in the bank, okay? Because your money will be with the bank and they know that you're not going to get your money for a specified amount of time. Therefore, your money is going to attract a high interest, okay? High interest simply means how do I put this? Okay, if you are putting 100 kwacha, for example, depending on the interest rate, the bank will be adding a 10 kwacha after a specified period, okay? So that's what it means. So the interest rate, the money, the additional money the bank adds on your money is high, okay? Also, you can be putting a fixed amount, and like I've let me say what I've just said. So it has high interest. Then also, of course, you can be putting a fixed amount there, and also you cannot withdraw until maturity. What it means is you can only withdraw when the specified period of time that you agreed on reaches. The other type of account is savings account. So this one is a type of account that provides a safe place for people to keep their money until they need it, okay? So they are both a way of saving, but in this case, you can get the money when you want it, okay? It's not like here where you have to wait until the money matures, okay? So this one is suitable for small savers, for people who don't want to save huge amounts of money. Of course, it offers safe storage, okay, and of course it is good for those who get regular income, like every month, and you get paid, then from your salary you get a small amount you save, okay? So a savings account is good for that. Next, we look at current account. So this is a non-interest bearing account which provides customers with checkbooks and cash cards for easy deposit and withdraw, okay? In this, okay, you can deposit and withdraw money at any time you want, okay? Because of this, there is no interest. Putting your money in the bank won't make the money to increase. There will be no interest. The bank is not going to be putting additional money on your money, so no interest is going to be added, okay? So that's the difference between current account and these two, okay? And also it should be noted that these two are for saving, but this one no, Okay, you can get the money whenever you want, and you can deposit the money whenever you want. So this one works more like your mobile money, where you can get the money from your mobile money or deposit money from your mobile money whenever you want. So it is available for members of the public, especially businessmen and women. In this, the checkbooks are issued to the account holders for withdrawal and payments. Okay, so you can use checkbooks to withdraw and, of course, deposit to the bank. So I've looked at three types of accounts that that of course one may open with a bank. Now we're going to divert a bit from types of bank accounts. We're going to look at a type of banking system, okay, called a building society. It's more like a bank, but not like normal banks. Okay, so what is a building society? So a building society is a financial institution that provides banking services, mainly savings and mortgage lending. Okay, so it's a financial institution and it provides banking services. The main types of banking services they provide is savings and mortgage lending. Okay, what is mortgage? So mortgage is a type of loan used to purchase property where the property itself serves as a collateral, meaning that when you get a loan, okay, that loan can be given to you if you want to buy something like a house. Okay, so once you get that loan and buy a house, then in case you fail to pay back the loan, then they are going to get the same house. The bank is going to get the same house. In this case, the building society is going to get the house. Okay, so that's how that's what a mortgage is. Okay, let's take a look at some of the features of a building society. The first is it maintains share accounts for clients. What is a share account? A share account is a type of an account where if you have money in the account, then you become also the shareholder of the building society or of the society or of the financial institution. Okay, just by you having an account and putting your money there, then you are also the owner of you are the shareholder of the business itself. Okay, so that's how it is. Then they also provide long-term loans in form of mortgage. Okay, so they can give you a loan of 25 years. Okay, you'll be paying for 25 years. If you're 25 years now, meaning that you finish paying when you are 50. Okay, it may sound bad, but if you think about it, it may also be good. As most people in countries like United States of America, they have mansions, and these mansions they got them as mortgage. Okay, so another feature is they also get involved in buying of stock and shares on behalf of clients. Okay, they also provide estate and insurance services. Okay, estate services are services that have to do with land and buildings. Okay, they also provide insurance service. Okay, of course, insurance it's another topic, one of the aids to trade, of course, meaning that by the end of commerce, you're supposed to understand what insurance is. Okay, so they also offer savings account and may provide overdraft. Overdraft, we discussed it, so I won't waste time on that. Okay, so these are the features that building societies offer. They also get involved in buying and selling of foreign exchange. Foreign exchange is the exchange of foreign currencies. Okay, you want to change a dollar to a kwacha to dollar, so they also do that. Okay, so I've looked at the building society. We're also going to take a look at another special type of bank called National Saving and Credit Bank. Okay, so This offers, it's a bank, but which offers the following type of accounts, okay? That is the ordinary savings account, the fixed deposit account, and the investment account. In a nutshell, it provides savings and credit services to the customers. It's good for small businesses, okay? So even the investment account here, other than the saving, which we have discussed, and the fixed deposit account, which we have discussed, the investment account is used to save and manage money meant for investments. Okay. So the other features of National Saving and Credit Bank in Zambia, we have what is called NatSave. Is they offer money transfer services just like other banks. They also their customers can withdraw money from any branch because accounts are centrally kept. Okay, so you can withdraw money from anywhere. You don't have to go to the maybe if you are in Mfulira, you don't have to just you are not supposed to be in Mfulira to withdraw money. You can withdraw anywhere. Okay, it also offers loans just like in other banks. They also offer advances to their customers who are salaried. So advances, the full word is salary advance. So what it means is if you get paid every month on the last day of the month, then maybe midway along the month you have a challenge. Okay, maybe there is an emergency that you need to sort out. Okay, therefore you need money, but you're going to be paid at the end of the month. Okay, so if you have an account with NatSave, you can just go and request for a salary advance. That is, they are going to pay you your money before the actual day of payments. I mean, they are going to pay you the money right there and then, instead of you waiting for the last day of the month. So it means you have gotten a salary advance. Okay. They are also involved in buying and selling of foreign exchange, just like another bank. Next, we look at the difference between a fixed deposit account and current account. We discussed about the three types of accounts, right? The deposit account, the current account, and the savings account. So here we'll just focus on the differences, which I think you can tell the differences from what we discussed. But anyway, let's just dive deep into it. We see the difference between a fixed deposit account and a current account. So the first difference is a fixed deposit account is suitable for those who have extra money to be set aside to earn interest. Okay, you don't need to use that money you have. Okay, you have just you just have maybe 100,000 which is sitting, which is doing nothing. It has no purpose. It is just sitting there. Okay, so you can get this money, you put it in your fixed deposit account, and you forget about it. So long as it is there, it will be any interest, meaning that it will be increasing slowly. Okay, so by the time you'll be getting it, depending on the amount of time it has stayed there, you may end up discovering that maybe it has reached 150,000. Okay. Also, then on the other side, for a current account, it is useful for businesses who need safe method to make and receive payments. So this one is for quick deposits and withdrawals, instant deposits and withdrawals. Because of that, it is just good for businesses who need safe methods to make money and receive payments. Think of it in this way: you are selling carpenter at Mutandabantu market in Lusaka, Kanyama. Okay, so as you are saying that carpenter, you need money. Okay, you need money to go and buy orders. Once you sell your carpenter, you need to put money in the bank, so you need to withdraw money and deposit money at any time. So instead of just keeping the money, which can be stolen or maybe anything can happen, you use the bank. So that's what current account is meant for. Okay, then another difference is a fixed deposit account is opened with large deposit. You have to put a big sum of money. Well, a current account is opened without deposit. Okay. Also, a fixed deposit account earns high interest. Okay. Well, in a current account, there is no interest. Another difference is a fixed deposit account. You don't need to pay bank any charges. In fact, it's your money which is going to be making more money in the name of interest. Well, for a current account, it has high bank charges because they are going to give you a checkbook and also because you have to withdraw and deposit at any time. So the bank has to be working just to make sure that they satisfy your need, and therefore the bank is going to be charging you. Okay. Another difference is in a fixed deposit account, the amount of deposit is fixed or remains fixed. Okay. Well, in a current account, money can be deposited and withdrawn at any time. Sorry for this, it's not supposed to be there. Yeah, so money can be deposited and withdrawn at any time, and it's not a fixed amount. You can withdraw whatever amount and you can deposit whatever amount. Okay. There are another difference is in a fixed deposit account, money cannot be withdrawn until a specific period expires. Well, in a current account, there is no limit of withdrawing money. Okay, you can withdraw anytime, anywhere. Okay, then in a fixed deposit account, you're going to be given a certificate of deposit once you deposit the money. Well, in a current account, a checkbook is issued for withdrawal. They will give you a checkbook that you can use to withdraw. So these are the differences between a fixed deposit account and a current account. See you in the next lesson.